Hey everyone, welcome back to the Crypto Daily, where we keep you updated in just 10 minutes. Today's update is packed with the latest news, key market trends, and some bold predictions that are shaking up the crypto space. If you want to stay informed and don't have time to sift through articles, you're in the right place. Let's dive into the biggest stories this week. To kick things off, Bitcoin's price recently saw a significant rise, which caught many traders off guard. In just a short span, over $100 million in short positions were liquidated. For those unfamiliar, liquidations occur when traders using leverage get wiped out due to price movements going against them. The sharp increase in Bitcoin's value caused a cascade of liquidations, forcing bearish traders out of their positions. This kind of market volatility isn't new, but what's interesting is that the rise in Bitcoin's price was relatively sudden, hinting that there might be underlying catalysts at play. We'll touch on one potential driver in a bit, but this surge led to a lot of market movement in the derivatives space, especially for those betting against Bitcoin. Next, we need to talk about BlackRock's CEO Larry Fink and his latest comments about crypto. In a recent interview, Fink revealed a pretty bold vision for digitizing the US dollar using AI-powered technology. His radical plan involves integrating blockchain and AI to create a more efficient financial system, and he believes this could significantly impact the value of major cryptocurrencies like Bitcoin and Ethereum. Fink's perspective is particularly important because BlackRock is one of the largest asset managers in the world. When someone like him talks about a potential future where blockchain technology plays a central role in traditional finance, it's worth paying attention. If this idea gains traction, we could see a big shift in how people perceive and use cryptocurrencies, beyond just speculative investments. On a more cautious note, Robert Kiyosaki, author of Rich Dad Poor Dad, recently made a dire prediction. He believes we're headed toward a major market crash, which could see Bitcoin plummet to as low as $5,000. Kiyosaki is known for his provocative takes on the financial system, and while his predictions have often sparked debate, this one comes amid growing concerns over a potential global recession. Kiyosaki's reasoning ties into the broader economic climate, where inflation, rising interest rates, and geopolitical tensions are creating uncertainty in the markets. His stance is that in a collapse, assets across the board, including Bitcoin, would lose significant value. However, Kiyosaki remains a long-term advocate of Bitcoin, believing that despite a potential dip, it will ultimately serve as a hedge against fiat currencies. Now let's shift to MicroStrategy, a company that has become synonymous with Bitcoin accumulation. CEO Michael Saylor has doubled down on his Bitcoin strategy, and he recently shared his so-called $100 trillion endgame. Saylor's vision is a future where MicroStrategy holds an enormous amount of Bitcoin, and he predicts that this will lead to an unprecedented shift in wealth distribution. MicroStrategy has been gradually increasing its Bitcoin holdings, and Saylor's long-term belief is that Bitcoin will eventually become the dominant store of value, surpassing traditional assets like gold. This bold strategy has had a profound impact on both MicroStrategy's stock price and Bitcoin's market dynamics, especially as other institutional players begin to take similar positions. Let's talk about what some are calling Uptober. Historically, October has been a favorable month for Bitcoin, and this year seems to be following that trend, albeit with a twist. While the price of Bitcoin has remained relatively stable in October so far, the market seems unusually calm as traders await the upcoming US election. Analysts are keeping a close eye on how political outcomes could influence the crypto market. Typically, elections create uncertainty, which can lead to volatility in assets like Bitcoin. While some are predicting that the election results could push Bitcoin's price even higher, others warn that we might see a short-term dip before any significant rally. Shifting gears to the mining side of things, Bitcoin mining profitability took a hit in September, according to a report by Jefferies. This is a trend we've seen as the price of Bitcoin has remained steady while energy costs continue to rise, squeezing miners' profit margins. This dip in profitability could have long-term implications for the Bitcoin network, particularly if miners begin to scale back their operations. However, Bitcoin has proven resilient in the past, and it's likely that as the market adjusts, mining activity will stabilize. It's impossible to talk about Bitcoin's market without mentioning MicroStrategy again. The firm recently made headlines when speculation swirled about their involvement in Bitcoin's price surge. Some analysts believe that MicroStrategy's ongoing accumulation of Bitcoin has added upward pressure on the market, contributing to the recent price movements. This level of corporate involvement in Bitcoin is relatively new and marks a significant shift from Bitcoin's early days as a retail-dominated market. As more institutions like MicroStrategy come into the space, we're likely to see even more volatility, but also more long-term stability, as these players have a vested interest in supporting the Bitcoin ecosystem. So, there you have it, a quick, comprehensive update on the latest in the crypto market. Whether it's Bitcoin's sharp movements, bold predictions from market leaders, or new developments from institutional players like BlackRock and MicroStrategy, the landscape is constantly evolving. The key takeaway? Crypto is becoming more integrated into traditional finance, but with that comes both opportunity and risk.
If you enjoyed this breakdown, don't forget to subscribe to our channel for more updates. Let us know in the comments what you think about the latest news. Will Bitcoin reach new highs, or are we in for a bumpy ride? Thanks for watching, and we'll see you in the next one.
Stay informed, stay prepared, and as always, stay ahead of the curve in the world of crypto.